Welcome back to the Dividend Diplomats YouTube channel. Make some noise because you're rolling not with DX, but with DD, the Dividend Diplomats, baby. Bert the Hurt and Lanny, your two favorite dividend stock investors.
Got one word to say to everybody before I do this. Woo! The diplomats are back, baby. Before we jump into this video today, you know what to do. Smash that subscribe button. Give this video a thumbs up. Right before we hit the record button, Lanny and I checked on that subscriber count to see where we are at. 14,991. So everybody, we are so close to 15,000 subscribers. So help us get there with this video. That would be greatly appreciated, team.
The final countdown, guys. We appreciate the support. On this video here today, we are going to showcase two dividend stocks here right now in the same similar type of industry. Both dividend, not just dividend aristocrats, but we're talking two dividend kings because we're talking quality right now. This week's video, Sunday and Tuesday, you're going to see a lot of quality. Then you might see a lot of dogs in the week. So we're going to start off here on this Sunday morning. Hopefully you guys got your coffee or adult beverage this early. And we're going to hit with quality first, Bert.
Let's do it. And how are we going to look at these two companies when we're talking about them? Using our famous Dividend Diplomats dividend stock screener with three simple metrics and that bonus metric. 1, PE ratio less than the S&P 500. 2, got that payout ratio less than 60%. 3, history of increasing those dividends. Take the toothpick, just flick it at the camera right there. That bonus metric is the dividend yield.
There it is, guys. So we're talking about the consumer goods industry here today. We're talking a top 5 foundation stock for your portfolio today. We're talking a stock that's almost yielding back to 3%. And both of these companies today have brands in your house. There's no question about that. I know looking at the list of brands, I've got at least a dozen that I can pull out right now. I don't know about you, Bert.
Yeah. Oh, no, I used one of them this morning. So there, I agree. That's why we love these things. That's why we love these dividend kings.
You use the plunger on your...
Not only the plunger, Lanny, but the Loves and the Pampers and all that good stuff. You got the Charmin. And guess what? I'm not talking about my daughter using those diapers. I'm kidding, everybody. All right. So here we are talking about these two behemoths, these two consumer staple dividend king that have managed to increase their dividend through many good economic cycles and bad economic cycles. That's what it's all about. Lanny, talk about those companies.
Yep. So how we're gonna do the analysis here today. Again, there's two stocks. We are going to go side by side as you've seen in the past. So we're gonna start in one corner, Procter Gamble, ticker symbol PG. And Bert, who's in the other corner right now?
Colgate-Palmolive, ticker symbol CL.
So guys, the stock prices of this video are on October 14th, really ending that last week that we just had here in October. So just bear with that. We're using analyst estimates from Yahoo. So guys, Procter Gamble, let's dive into that first metric, that price to earnings ratio. Right now, Procter's trading at a 125.08. They're down 23% this year. This $300 billion market cap, analysts are expecting $5.86. So that still leaves a price to earnings ratio when you take the $125.08, divided that by $5.86 to a 21.34 forward or price to earnings ratio right now.
So Colgate price $71.33, earnings per share $3.26, PE ratio 21.88. Trading a nice little premium there to Procter and Gamble, aren't they?
Little premium. It's like, who's got the edge here? Is it Ultimate Warrior? Is it Hogan? Is it Hogan or Ultimate Warrior, guys? But I'll say this on both. They are both trading higher than that S&P 500 price to earnings ratio. Why? Because that S&P 500 PE ratio right now, because the S&P 500 has been down so much this year, Bert, that PE ratio on the S&P 500 is about gosh, it's amazing where it's come down now, but it's at 18.
Yeah, I know. And it's so both of them are trading at a premium to the market, but they're pretty even when they're side by side. So that's what it tells you. But quality, it means something. These stocks were never going to be the cheapest. And historically, you're never going to see them with the lowest PE ratio. And there's a reason for that. And we're going to try and outline that throughout the rest of this video. Let's move into that second metric where we look at the safety of the dividend by measuring the payout ratio. This metric takes dividends per share divided by earnings per share just to see how much of the company's earnings are paid out in a dividend. If you hit 100%, that's a no-go because you can't pay out more than you earn in the long run. So we look to see around 60% or less. That's our threshold to give it a little eyeball test to say yeah, there's plenty of room. If the earnings come down for a little bit, the dividend feels safe. So Lanny, what is Procter & Gamble's dividend payout ratio?
Now, Procter's recently has been on the higher end of around 60%, give or take 5% lately. Again, I keep saying lately over the last handful of years. So right now, that dividend payout ratio that Procter Gamble is rocking is about 62.34%. So taking that 91.33 cents per share per quarter. Yes, Procter has these unusual quarterly dividends. They really like to extend it out to that fourth digit. I appreciate it, but it's like, come on, Procter, just make it 91.5 or 91.25 if you really need to.
At least it's not a foreign company that you have to throw in a currency there.
Right. So taking that 365 over that $5.86 in expected earnings, you have a 62% payout ratio. But Bert, how does Colgate stand the test?
Their dividend, $1.88. Divide that by the forward earnings of $3.26 that we mentioned earlier. Oh, that gives you a perfect payout ratio of 57.67%. Baby, let's go. Colgate. You can't see me, so I'm gonna do the LeBron, the stomp down there. Let's go. But all right, so Procter Gamble 62%, Colgate 57%. Both are great. There's nothing really more to say about that. They're pretty even though Colgate's a little lower. I'd say they're about the same. No clear winner here.
No clear winner, but let's dive into that third metric, that dividend growth rate. We're looking at history and what is that rate on growth? So guys, there's no question. Procter & Gamble, 68 years of consistently raising the dividend, 68 years. That's one of the longest active streaks right now in the dividend investing community. If you're a beginner investor, you're looking at what stocks to buy or what stocks to start your dividend stock portfolio, you don't have to look much further than buying a share at least of Procter & Gamble because of the consistency. 68 years is so hard to compete with, and they do it at an average rate of 5.6%.
I feel like Colgate's like the little brother to Procter Gamble here in the thing, because they're like, it sucks. Procter, you're so great. We our increase 59 years, so it's like they're just staring at them like, I'm never going to catch you here. But their 5-year average dividend growth rate's 3.10%. So that's where you start to see a little separation here from Procter & Gamble and Colgate. Procter's got that strong 5.6% 5-year average dividend growth rate, while Colgate's a little lower than you'd like to see here for a dividend king in this sector, especially with a lower payout ratio. You'd think they have a little more room to bump up that dividend more than an average of 3.10%.
Not wrong there, because, man, that growth rate of 3.1% right now, when inflation is still well over 8%, tough pill to swallow.
Yes, it is. So let's move into that last metric here. That bonus metric, the dividend yield. Market S&P 500 yields around 1.50%. So keep that in mind here as a benchmark. We'll see how much of a premium these yields are to the market, and even your high yield savings accounts, which should be around 2% right now if you're doing it right and investing in the right platforms. What's Procter's dividend yield, Lanny?
Well, PG's dividend yield now is approaching the illustrious 3%, the king of kings, the land of the mighty at 3%. They're at 2.92% at the time of this video. And Bert, do want to say the S&P 500, that yield has actually swelled up a little bit to around 1.7 to 1.8% right
Where have I
because
missed
of
that? Yeah, no, then
because of
that makes sense. I must have missed that this week. So yeah, I had to upward adjust my metric here. Everyone, I'm going to retract that. You're getting an on the moment retraction here. The S&P 500 yield is not 1.5. This is 1.7%. But you know what? Procter still crushes that 1.7%. So you know what? They're just like, here you go, market, right down there.
But what
And
does
they also,
Colgate do? What does the other opponent do in this battle here?
again, Procter & Gamble's like stiff arming them a little brother in Colgate here. Their yield is only 2.64%.
Is this like the Nick Chubb and Kareem Hunt tandem here? Where, hey, Kareem, we'll give you a couple handoffs just so you can get beat up a little bit, but then Nick will give you some really good protection.
But like when we need the ball, you know who's getting it here. I think that's really the right analogy. I love it.
Yeah, you'll never catch Nick Chubb's contract years right now, Kareem. Sorry.
Yeah. The difference when Nick Chubb wanted the contract extension with the Browns and made it happen. Kareem Hunt, I want an extension. Like, let's play this year out and see how it goes.
You'll get on the field. So guys,
earn it.
To summarize the metrics here on Procter, and Bert, you can summarize Colgate. Procter's got a 21 price to earnings ratio, a 62% payout ratio, a 5.6% dividend growth rate with 68 years of growing their dividend at 2.92% yield.
Colgate P ratio 21.88, payout ratio 57%. 5-year dividend growth rate, 3.1%, but they've increased it for 59 consecutive years. Their yield is 2.64%.
So guys, a couple other things to mention here for Procter & Gamble to see kind of what's been going on here with the stock price as well as the company. Big headlines have happened with Procter & Gamble. They are battling, obviously inflation and the strong US dollar. They are still facing China lockdowns, which is hurting and impacting their supply chain and inventory and cost overall. Expect earnings to be announced later on this week. So keep your ears tuned to that because the stock price could come down a little further, as you know, Bert. In addition, there was a 1 million share tender offer purchase that Procter put out to their SEC Edgar or their investor filings, recommending to reject it because the offer was for $118 and change per share for 1 million shares. So just an FYI there. And in addition, on the positive side of being a dividend investor, Procter & Gamble, they stated that they expect to repurchase back between $6 to $8 billion of stock in 2023 alone, which should reduce share count, increase earnings per share, potentially increase share price, but leaves a nice paveway for another dividend increase next year.
Yeah, and maybe with that, they'll decrease it enough to where the payout ratios become even because they are close enough. Procter Gamble's payouts at 62%. Maybe they'll be able to tie Colgate there in the high 50s. But
Colgate is pretty consistent right now. No new real big news, right?
No, nothing, no major headlines. We do the search beforehand. They're not as noisy as Procter Gamble. Worth noting, they're projecting over 17 billion in sales this year. So that's billion with a B. So just a great company, strong consumer brands, slow and steady, just kind of chugging along here. I think that's kind of the story for Colgate. It's not the fanciest. It's not that, but it's just a solid consumer staple stock that continues to increase its dividend.
So guys, are you buying any of these two dividend kings right now? Bert, you own Procter, right?
Yes, I do. And so do you, I believe. Right, Lanny?
That is correct. I know personally, if they hit 3%, I'm going to buy at least a share.
Yeah, you got to get Procter one share at 3% right there. I mean,
Right.
No, I was going to say I can't agree more with that. Colgate, I'm just not that, I mean, you put them side by side and it's just hard to pick Kareem Hunt over Nick Chubb right now. I think that's kind of the story. Like you look at the two companies side by side, Procter & Gamble's metrics are just better today. So you would say if you are going to buy them, you go Procter, not Colgate. Follow the metrics on this one, people.
Follow the metrics, follow the money, follow the dividend diplomats by subscribing to our channel, guys. So let us know in the comments, are you buying any of these two dividend kings? Which one are you looking to purchase? What other dividend stocks, dividend kings are you buying right here, right now in the stock market?
Give us a thumbs up if you haven't already, everybody. Thank you for the love and support over the years. Let's keep going. Keep buying those income producing assets. That's what it's all about.
That was Bertha, Hurt, and Lanny from the Dividend Diplomats. Over and out.